Hello and welcome back to Financial Freedom Hub. In our today's video, you will learn what leverage is and how it affects any business. Once you learn this, you can make life-changing investment decisions and achieve financial freedom. A quick reminder, you might want to check out our playlists to learn how to read any company's financial statements and achieve true financial freedom from investing. Our videos teach you to fully understand any business. You will know which businesses are good investments and which to avoid. You will never have to rely on luck again. So, let's get started. Leverage is the use of borrowed money to invest in assets that are expected to generate a higher return than the cost of borrowing. Companies use leverage to increase their profits and returns on investment. For example, banks borrow money from depositors and other sources at a low interest rate and lend it out to borrowers at a higher interest rate. The difference between the interest rates is the bank's profit. However, it's important to know that leverage can make a company look better than it really is. For instance, if a bank borrows $100 billion at 5% and lends it at 6%, it will show a return of 1% or $1 billion. If the bank shows these $1 billion returns for a long period, it might look like the bank has a stable income, and you might think that it's a good business with a competitive advantage. The problems arise, however, when the economy starts to decline, and the bank's borrowers start to default on their interest payments. This happened during the recent subprime crisis, when banks borrowed hundreds of billions and loaned them out to subprime home buyers. Banks made a lot of money at the beginning, but during the periods of crisis, those subprime home buyers started to default on their mortgages and stopped making interest payments. The banks, however, still had to fulfill their obligations. In order not to fall into these traps, we need to be smarter than that. In our earlier video, we discussed the two rules about long-term debt, one of which states that good businesses, with competitive advantages, never need to borrow large amounts of money to run their business or finance their expansion. This is because they generate enough cash flow from their operations to fund their growth. So, the key takeaway from this video is that for financial freedom, we would want to avoid businesses that use a lot of leverage to generate earnings. We hope you learned something useful from this video. If you did, please like and subscribe to our channel for more videos on personal finance and investing. Thank you for watching.